You are watching the Love and Money Show, and today I have a very special guest, Marion. Thank you for being on the show.
Thank you for having me.
Okay, I'd like to start out by having you tell us who you are and what do you do?
My name is Marion Lee. I'm based in LA, and I'm a full-time real estate investor. So about 7 months ago, I was able to quit my W-2 job, and now I am just full-time in real estate. I do
Congratulations.
Thank you. It's a big milestone. I was very excited, very nervous, but it's worked out well. I do some buy and hold, so like grew my portfolio over the last 5 or 6 years, and then I also flip properties as well. So I do both sides of what people call real estate investing full time now.
Okay,
Yeah.
that's a big deal. I'm so happy for you, Marion.
Thank you. Thank you. Thank you. Yeah, it's kind of like surreal because that was like, always been the goal to live off real estate. So to actually achieve that goal, it's kind of a surreal feeling.
Okay, so you do buy and hold and flip.
Mhm.
Um, what's your background?
What's my background? So I have a degree in accounting. I went to school,
Okay.
went to undergrad for accounting. Coming out of undergrad, I didn't go to an accounting firm. I actually went into consulting, and I was a management consultant for about 12 years. And then during that time, began investing in real estate. So it's really not like a clear background that's kind of led me to real estate investing, property management. I will say though, some of the skills I learned as a management consultant, as far as planning, running a project, whether like a flip and a rehab. And now I've actually just hired someone. So to just managing people, a lot of the skills I learned in my corporate life have translated over well, although it's not like a direct path that you might think someone would take.
Okay, that's interesting. So you having a degree in accounting.
Yeah.
Marion, why real estate? Why did you choose real estate?
Early on, I thought just real estate was cool. So always go back to like I forgot what the name of the show was, but it was like Armando Montalago, those really early flipping shows.
Okay.
I used to watch those shows, and I just thought flipping was so cool. Um, just seeing it on TV. So as I got older, I would say to like and tell people when I was in college, like, yo, I'm gonna go into real estate. Like, I don't know what I'm gonna do, but I'm gonna be in real estate. And then as I read more, learned more podcast books, I kind of found out like how I could become an investor. And so my love just of like the interest in real estate really became a love for it once I understood it. And I began doing, not even doing deals, like early on, just analyzing and understanding it and having those moments where you analyze a deal, you don't necessarily buy it, but then you kind of track it through the process and see someone else buy it and see them flip it. You're like, yo, like I would have been right. So I think I've just always been interested in real estate. And then once I got started, I fell in love with it. And then once I fell in love with it, I realized how powerful it was. And so that's what keeps me in real estate, just the overall like power of real estate, in addition to me just having like a pure love for real estate.
Okay. The power of real estate. Yeah.
Yeah. Yeah. It's one of the, in my opinion, one of the most powerful tools, because it gives you like so much freedom. And then I'm not a heavy stock guy.
Okay.
Um, I dabble, but I know like one of the main things people do is look for dividend producing stocks,
Mhm.
right? Because the goal is a lot of times, or you hear people, not always, but uh, buying enough dividend paying stock to be able to live off of in the future.
Mhm.
Um, and a lot of times they've been paying stock. If you get 5, 6% on a stock, like that's a good dividend. Um, and in a stock, let's say it's $100, so $100, $6%, $6. right? But if you are able to buy real estate, I love the burst strategy. So it allows me to use the same bucket of money over and over, and I can get $1,000 a month off of this investment versus six. So that's why I think it's so powerful. Allows you to generate passive income a lot faster, in my opinion, than other investment vehicles.
Okay, that makes sense. Yeah, I didn't really understand the power of real estate. I wish I had a knew that a long time ago.
But you know now, that's like half the game. Once you realize, because like some people never understand it, never realize it. So I always say, like, no matter where you are, like in your journey, just being on the journey to acquiring real estate and attempting to achieve financial freedom, you're ahead of the game because most people don't even know that there's a game to be played out there. So just knowing and trying to play the game puts you ahead of a lot of people.
Yeah, I understand what you're saying, Marion. So Marion, so what does your portfolio look like?
So again, I'm not a heavy stock guy, so all my investments, well, largely my investments are in real estate. And it's all out of state real estate. So I mentioned I live in California, but all of my properties are in the Hampton Roads area of Virginia. A lot of times I get the question like, how did you pick that area of Virginia? Because it's not a popular area. I went to school at Hampton University, so
Oh yeah.
I was there for 4 years and kind of realized that the property values were a lot cheaper than California. So when I got started, I didn't have as much capital, didn't have any private investors. So getting started with less money was attractive to me. Since then, I've kind of just grown my team there, and that's why I stay in that market. But in that market, I have a mix of single family and multifamily properties, still like residential, so 4 units and less. And it's kind of spread out through that Tidewater area of Virginia. And it's, I don't think I said a number, but it's like 30, 31. I just sold two in the last couple of weeks. So down to 31,
31 doors.
31 doors.
Amazing. Um, how long did it take for you to acquire these doors? About on average.
Um, I bought my first property January 31st, 2017. So less than 6 years, I would say. I haven't bought anything recently. So about 5 years. And it's really four because that first year I bought that one property and I didn't buy anything else in 2017. So really was on a buying spree between 2018 and 2000, like 20, early 2022. Haven't bought too much in the mid to late part of this year.
Okay. So Marion, so how did you scale so fast?
Um, I think there's a couple factors that contribute to my scaling. Was one, started buying multifamily property. So originally I was buying single family properties and they were great. But again, part of what I wanted to do was get to financial freedom. So I needed to acquire more doors more rapidly. So I was able to purchase multifamily property, which allowed me to scale faster. In buying that and doing that, I was able to start using private money to purchase these multifamily properties. So having just cash that just is in excess of what I personally have and being able to provide a return for other individuals. And then lastly, I think one of the things that enabled me to scale was just the way I looked at things and kind of how I managed my portfolio and how I set aside my reserves. I think it differs for you. For me, I started differing the way I did things once I got to a certain area and was able to kind of put aside less and look at my portfolio like you would look at a commercial building, like 5, 6 units or any amount of units in commercial, versus looking at them like you would look at single family homes. So those are, as probably a long-winded answer to say, but if I was to really break it down, it would be private money, going multifamily, and kind of how I manage the properties.
Okay. For someone who wants to get private money, what would be the first step in getting private money?
I think building a brand and letting people know that you're in real estate and you're doing deals,
Okay.
um, because a lot of times people are going to do deals and invest in you as a person. And if you're able to show that you're successfully doing real estate transactions, people will feel comfortable investing with you because they're able to see your track record. Um, in that, when you're able to have conversations, I think it's really important to break down the investment structure into really layman's terms. And as an investor, you're probably sophisticated and you know these different terms that other investors know you might use in a conversation with another investor. But to someone that's not an investor, some of the terms can be intimidating, and then an investor might not understand. And when people don't understand, they don't take action. So those would be like my first two things. Build a, actually, there's a third thing. Sorry. Actually, do deals, right? So do deals with your own money first, so you have the knowledge and understanding of how to actually do deals. Show that you're doing those deals, so you build a brand. And then three, being able to really communicate the investment offering to people that may not be sophisticated in real estate investing.
Okay. All right. Marion, can you talk about maybe one challenge that you faced in real estate?
Yeah, I think the challenge is like finding the balance in scaling and management of current portfolio, and kind of like what that appropriate level is of aggressiveness to grow and kind of growing at the right pace. Um, and I think that's the biggest challenge. So just managing your current pool of money, your current investor pool, and not getting out over your skis, so to speak, while trying to scale, I think is the biggest journey. I mean, the biggest challenge.
Mhm.
And it's a challenge because there's no right or wrong answer for anyone. You have to determine what that threshold or what that trajectory looks like for you in your business and your investing journey. So I would say for me personally, that's been my biggest challenge, is just finding that right balance.
Okay. Um, so you're a long distance real estate investor. So
Yes.
what advice would you give to someone who lives in a high cost area who wants to buy property?
Um, Go long distance. One, I think, and there's ways and tools and resources that can be put in place so that you can use to do it. So I think really understanding a different market, whatever market you want to go in, really understanding that market, um, find it, get involved, do the deals there, find, and the biggest thing, let me take a step back.
Okay.
The biggest thing that scares people with going out of state or going long distance is having to manage this property from afar. And you don't have to manage the property. You literally just have to know the numbers and how and what a deal looks like and how to operate a deal and get in a deal. And then you can turn it over to a management company. So I think it's really just go for it. If you're in a high market and you want a high price market and you want to go somewhere else, go for it with the proper education, and you can put the proper resources and tools in place to prevent any major loss or minimize your challenges.
Okay. Marion, I'm going to ask a question for myself.
Okay.
I can see buying one property a year. That's what I can see.
Hmm.
And so, how many properties have you bought in 1 year, and how do you do it?
Um, I
I mean, I
think,
know you talked about it already, but
yeah, I think last year, like, so buying properties, I buy and hold properties. So last year, I think I bought 5 different buildings. Um, I think it was like 12 units or something like that. Um, and
so
it's,
5 buildings in 1 year.
yeah.
Okay, I can't see this in my mind, but I hear it all the time on the podcast. And so I have you here to tell me how.
um, okay, so I'm going to flip it back on you. You might hate this, but what's preventing you to say, like, I can't do it? Like, why can't you see it? What's preventing you from doing it?
I'm thinking the financing, and I guess that's it, the financing.
Yeah, and that's the case for most people, right? So financing, I'll break it down into 2 parts. One is private money, right? Like you can, if you're using, so I use the Burr method, which is buy, renovate, rent, refinance, repeat. Pretty much buy a property that needs some work, renovate that property, rent it out, buy it at a point where you have equity. You're all in at about 65 to 70% of the ARV once you buy it and renovate it. And then you're able to do a cash out refinance, get all the money or a large majority portion of the money that you put into the deal out, and then go do another deal. So, using the Burr method with private money is how I was able to do it. Um, that's like the biggest thing. With that too is having your properties in an LLC and doing business in an LLC. So if you are buying a property a year and it's in your personal name, that one property starts to affect your debt to income ratio,
Mhm.
where because they don't count all of the cash flow. At least when I was trying to, my first couple properties were purchased in my name, and when I went to get the third and try to refinance it, I came into the problem where uh, it was affecting my debt to income ratio. Even though the properties were cash flowing, the bank wouldn't count the cash flow. If they counted, they only counted a portion of it because I hadn't had the properties long enough.
Mhm.
But when you're doing business in an LLC, a lot of times you can use what are DSCR loans, which are is DCSR, debt coverage, yeah, service ratio, debt service coverage ratio, DSCR loans, which is really looking at the cash flow of the property. Is it 1.25% of the debt? And if it is, a lot of times that's enough for them to lend on a refinance or financing the purchase of that property. And so they're not looking at your debt to income ratio. They're really looking at, can the income of this property cover the debt adequately? Um, so that's the 2 pieces. It's finding out an additional source of capital, whether it be private money. Some people start leveraging credit cards. I have not gotten to that. Some
Mhm.
people leverage HELOCs. I do have a couple HELOCs on some of my properties. Um, Whatever it is finding that capital that will allow you to do these deals and then do the deals. And I personally like leveraging DSCR loans to do just real estate in general because I think it's a better way. One thing I will say with the DSCR loans, your interest rate is typically a little bit higher than what you would see on just the standard like owner occupant mortgage. But if you incorporate that when you're analyzing the property, you expect a little bit higher upper interest rate, you can make sure that you're buying the property at the right price to have that higher interest rate and still cash flow.
Okay, that is great information.
Yeah, I think if that was to break it down, that would be the way to do it. And I think, and I'll say this, one of the most critical things I think in investing, and especially in real estate investing, is the ability to critically think. Um, what you're doing a lot of the times is solving a problem. And if you can think of a way to creatively solve a problem, then you can have the reward for solving that problem. So if you sit and spend enough time thinking, a lot of times you can come up with an idea to solve your problem, in my opinion.
Okay, Marion. So we got about 10 more minutes.
All right. Long-winded responses. I'm gonna go quicker. Go ahead. I'm sorry.
Marion, what is your favorite book?
Um, I would do like two because I think the two of them have really helped me get to the point of where I am. The first is The Real Estate Millionaire Investor. I believe it's by the dude that Keller Williams. I forgot his name. And then this is going to sound really cliche, but Rich Dad Poor Dad. And Rich Dad Poor Dad is like on my favorites because it helped me realize that money isn't real. It's like numbers, and if you can create those numbers, you can do things with them. So having the knowledge and kind of the motivation from the millionaire real estate investor, and then realizing that money isn't real and you can kind of play with these numbers and create them, I think have worked really well for me the last couple of years.
The millionaire real estate investor. I have to
Yes.
check that one out. Now I read the other one, but that one sounds interesting.
Yeah, it's by Gary, I believe it's by Gary Keller. I read it years ago, but
Okay. Okay. Mary, I'm gonna switch over to love. This is Love and Money show. So,
okay.
are you single or married?
I am married. I've been married for 7 years.
Okay. And can you tell us one thing that you learned about money as it pertains to relationships that can help someone else?
Um, Talk about it. I think a lot of times people don't want to talk about money, or it's like a weird subject to talk about. Um, so talk about it, plan for what you want to do with money within your marriage and like something that both partners are comfortable with. And then be comfortable having an unorthodox approach to money. A lot of times people like hear or see or like someone pushes their view of money onto you or onto your marriage where that point of view might not be what's best for you and your partner. So just being comfortable doing what's best for you and your partner, even though it may not be what someone else is doing with their money in their marriage.
That sounds good. I heard 2 points. The first point sounds so simple, but it's so profound. Talk
Actually
about,
talking about it, yeah, actually talking about it, and not just kind of hoping things work out money wise.
and the second one, to do what's right for you between the two of you.
Yep,
So,
exactly.
okay, Marion, last question. Um, what advice would you give to someone who wants to quit their job? Because you've already done it.
Yeah. Um, just create a plan, work the plan tirelessly, just keep working the plan. And then set up and make sure you have reserves. And I guess that's part of your plan. Make sure that you have good reserves. Things don't go as planned, and it's a lot less stressful to kind of weather those storms when you have reserves and you're not stressing about money, but you're able to kind of just tap into that bucket of money that you have in reserves. But you really have to have a plan. Mine was always acquiring cash flowing rental properties until I got enough to replace uh, my W-2 income and then quit. Another thing I would say people worry about is insurance. and quitting their job, they think like, man, I'm not going to be able to get insurance. But if you price out insurance, it's a lot of times when I did it, it's like $800 for me and my daughters, both of my daughters, so like three people. My wife still does have a W-2, so we ended up not using that and just all going into her insurance. But yeah, I would say, again, in summary, because I know that my responses get a little bit long, um, come up with a plan, work the plan, make sure you have reserves baked into your plan, and then don't let insurance be the thing that keeps you at your job because you can be insured by yourself.
Okay. Marion, I forgot to ask you to tell us about your clothing line.
Yeah. So I started, I don't even know how many years ago it was, but Real Estate Apparel Co. And my thought or why I started, or the problem I was trying to solve when I started the company was there's no apparel or no clothing that you can really identify like real estate investors. Like, this is our thing. We have like this brand, or you can see this shirt and it lets someone else know that I'm a real estate investor. So that's why I created the company. Probably the tail like 2022. I've kind of gone dark a little bit on the company, just focusing more on my transition out of my W-2 and stabilizing the portfolio to a point where I'm comfortable with it. But I'm looking to relaunch early 2023 and really keep pushing the brand and keep helping real estate investors be identified and foster conversation with other investors through their clothing. So very excited about kind of pushing the brand more early next year.
Okay. It sounds fun. I like clothes and fashion.
Yeah, it's like super simple too, right? It's like a if you think about, a lot of people know earn your leisure now for their assets over liability shirts. I feel like there's a couple different shirts that we've designed or I've designed with the company that can really drive conversation through the clothes. And honestly, like I was at the store probably a month ago and I had on one of our shirts, and the lady literally stopped me and I had a 12-minute conversation with her about real estate just because she saw my shirt and it sparked conversation. So that was exciting because that's exactly why I created the company, is to spark those conversations.
Okay, Marion. Last thing, where can people go to find you to learn more about real estate and to see your clothing line?
Yep. So I'm on Instagram. Is probably the best place to find me. My handle there is Legacy Home Solutions.